You've got a piggy bank on your dresser. Every dollar from grandma, every quarter you find in the couch, it goes in there. You can see it, shake it, hear it rattle. Your parents have a grown-up version, a real bank. Fancy building, people in suits, a big vault, and there are serious adults, regulators, watching that bank like a teacher watches a classroom. If something goes wrong, the government has your back. There's insurance. Your money is safe. That's how most people think the money world works. But here's what nobody told you. There's another world running right alongside this one. It does almost everything banks do, but nobody's really watching. No teacher, no safety net, no promise you'll get your money back. And this secret world is so massive, it makes the regular banking system look like a lemonade stand. Welcome to the $80 trillion shadow. What is shadow banking? Let me break this down simply. Imagine a kid on your street with a lemonade stand. He's got a permit from mom. Rules about sugar, cleanliness, hours of operation. That's a regular bank. Now imagine another kid 3 streets over, selling lemonade behind a fence. No permit, no rules, open all night, charges whatever he wants. But here's the trick. He doesn't call it a lemonade stand. He calls it a refreshment facilitation service. So none of the lemonade rules apply. That's shadow banking. These aren't called banks. They have fancy names like hedge funds, money market funds, private equity firms, special investment vehicles. They move money, lend money, borrow money. They do almost everything banks do. But because they don't have bank in their name, they play by much looser rules. And over the past few decades, this shadow world has grown into a monster hiding under the bed of the global economy. How big is this monster? So how big are we talking? $80 trillion. Let me help you picture that. If you stacked 80 trillion $1 bills, the pile wouldn't just reach the moon. It would pass Mars. It would stretch over 5 million miles into space. This isn't some small side hustle. The shadow banking system is now roughly the same size, and by some measures even larger than the entire traditional banking system. It's a parallel universe of finance operating in darkness. And here's the uncomfortable part. Your retirement savings, your pension, your insurance policies, they're all tangled up in it, whether you know it or not. Why is this dangerous? Let me take you back to the playground. The regular bank is like a game of tag with clear rules. There's a referee, boundaries, if someone falls, a teacher's nearby. Now imagine the shadow world is a different game. On the other side of the playground. No referee, boundaries keep shifting, and the kids playing, they didn't bring their own toys. They borrowed everyone else's toys, stacked them into a giant wobbling tower, and now they're all standing on top of it. If one kid sneezes, the whole thing crashes. But here's what makes this terrifying. The two games aren't separate. The kids on the wobbling tower borrowed toys from the kids playing the safe game. If that tower falls, it takes everyone down. The shadow system is deeply connected to the regular banking system you depend on. When shadow banking sneezes, the global economy catches pneumonia. 2008. When the shadow collapsed. This isn't just a scary story, it already happened. 2008, there was a shadow bank called Lehman Brothers, one of the biggest investment banks in the world. They weren't a regular bank, so nobody was really checking how risky their bets were. They borrowed massive amounts of money to bet on the housing market, built a tower so high, so wobbly, with so many borrowed toys. And when housing prices cracked, the whole thing collapsed in a single weekend. But here's the thing. Lehman was connected to everyone. When they fell, banks stopped trusting each other. Lending froze. Businesses couldn't get cash. People lost jobs, savings. The global economy stood at the edge of a cliff. The government had to step in with trillions of your tax dollars to stop the bleeding, cleaning up a mess made by institutions that had specifically structured themselves to avoid the rules. Did we fix it? You'd think after 2008, the grown-ups would have fixed this. Put a teacher in that classroom. Made shadow banks follow the same rules. Here's the dark part. They didn't. Oh, they passed some laws, added paperwork, gave stern speeches, but the shadow banking system didn't shrink after 2008. It doubled. It became more complex, more interconnected, more global. The monster under the bed got bigger, and it learned to hide better. The creatures in the shadows. Let me introduce you to some of the creatures creatures living in this world. Money market funds. Sounds boring and safe. People park cash there thinking it's like a bank account, but it's not insured. If things go wrong, there's no government promise. In 2008, one major money market fund broke the buck. People couldn't get their money back. It nearly froze the entire system. Hedge funds, private clubs for the ultra-wealthy. They use something called leverage, borrowing huge amounts to make even bigger bets. Imagine betting $10 when you only have $1, borrowing the rest. Win big? Great. Lose? You're wiped out, and you owe money you don't have. Hedge funds do this on a mind-boggling scale, sometimes borrowing 30 or 40 times their actual money. When those bets go wrong, the losses are catastrophic. And then there's the really complicated stuff. CLOs, repos, SPVs, names designed to make your eyes glaze over. They're the secret tunnels and hidden rooms of shadow banking, connecting everyone to everyone in a web so tangled that even insiders don't fully understand it.
Why does this exist? So why do we allow an $80 trillion shadow to loom over the economy? Simple answer: it's insanely profitable. Shadow banking lets people make money faster, with less oversight, fewer restrictions. For the financial industry, the shadows are a feature, not a bug. And the people getting rich in this world are very good at convincing politicians that shining a light on it would somehow hurt regular people. They use phrases like financial innovation and market efficiency, which often just means let us keep playing without a referee.
What you can do. I'm not telling you this to scare you into hiding cash under your mattress. I'm telling you because knowledge is your first line of defense. When your pension is managed by certain firms, when your insurance is backed by certain instruments, when you invest in certain funds, your money might be taking a detour through the shadow world without you knowing. You have the right to ask questions. You have the right to understand where your money actually goes. The shadow banking system isn't going away. It's too big, too profitable, too embedded. But the more people understand it, the more we can demand transparency and accountability. Right now, the towers are getting taller, the game is getting more crowded, and nobody seems to be watching. The question isn't if something goes wrong, it's when and whether we'll be ready. An $80 trillion shadow hangs over the world economy. Most people don't even know it's there. Now, you do. If this valued a bit, please subscribe and drop a comment. Share it with someone who needs to hear it. I'll see you in the next one.